All right, guys, this is Paul Singh, the Market Speculator, with the free weekly swing trade report at bullsonwallstreet.com. You can see here, I just put out the daily report for premium members here, and these are the focus list stocks we're watching this week. It's essentially a bunch of low floaters and some of the big tech here. So we're watching these closely, but what I want to talk about today is oil. And if we look at oil pre-market here, we're down over 1%. And here is the USO chart. And you can see here, oil has been crushed, going down from about 1150 when it was actually looking really strong in here, down to about 10. So it's lost 10 or 15% here in a very short period of time off the recent highs here. And now it looks like it could be continuing downwards, and we might finally have a trade here. There wasn't much we could do on this downswing unless you were already short. But the key here was, do we get a strong rubber band reversal bounce, or is it a rubber band dead cat bounce? And what a dead cat bounce is, when you get one of these big moves down, you get a little bounce attempt, and then you get the continuation move down. And that looks like what's happening right now. We see here, we had the reflex bounce, looked like maybe we could get up over the 9. I was just sitting back and waiting, and if we got back over the 9, I would consider getting in for the reversal. But this morning we're gapping down. Now the key is going to be the close. If we stay at these levels, this is a break of the little bounce here, and we're setting ourselves up for the move down to 950 here. So, sometimes pre-market, it was a weekend, it's down a little, but then during the day, it reverses itself. So we're not going to jump in right now. But if this holds, if this break holds here, I would look to get in, put my stop right in here, a really tight stop, a very low risk, high reward type of play. And now USO is where I do my analysis. This is the underlying ETF. But what I use to trade is a triple leveraged ETF. So these things are going to give us more volatility, more potential to make money, while we'll still manage our risk, even though you could lose more. If you manage your risk right, you're going to be okay. So UWT is what we'd be looking at here. You can see it's the same pattern, same gap down here. Then if we were to go long, I would use UWT. Now, if we want to short oil, there's two ways you can do it. One, if your broker allows it or has shares to borrow, you could short UWT, and you're betting that's going to move down here. But the other thing you can do here is play DWT. This is the inverse ETF. You can see it's basically the opposite of what UWT is doing. So you could just go long this, and essentially then, if USO goes down, if UWT goes down, DWT goes up. So even though it's a long position, you're really shorting oil. So we could enter right in here if this holds today. If it stays at 29.38, 29.25, maybe probably above 29 here, and or moves up here to about 30, then we'd have the play. And this 32 here basically corresponds to what we were looking at in terms of 950 on USO. So you could play it here, enter under 30, and then see if we get the move to 32 or even higher. I know it's a little confusing when you think about it this way. So if that is a little confusing and your broker allows, just short UWT directly. It's up to you how you want to play it, but there's two ways to short oil here. So that's one of the things we're focusing on today. There's a couple other things that are key this week that we went over in the daily trade report on Bulls on Wall Street. So keep an eye on that. And then next week, we'll see how this played out. And remember, guys, this is the first week post-Fed decision. And oftentimes it's not the initial reaction, it's what happens the following week. So we're going to be watching key levels on SPY closely to guide us going forward. So that's it for the weekly report. I'll see you guys next week. And in the meantime, I'll have a few other blog posts out. So keep an eye out on that.